I can almost guarantee you're trading the session range the complete wrong way, and it's costing you money. Most traders don't realize every trading session creates its own range, and if you don't know how to use it properly, you're basically giving away your money for free in the markets. Listen, I built my entire trading system around structure, price action, and sniper entries. I even took a $4,000 account to $40,000 here via YouTube live stream, and currently I'm doing a $100 challenge to $100,000 step by step on my YouTube as well. So I will say I do know what works best for me as a trader. So by the end of this video, you'll know exactly how to spot fake versus real setups, how to enter sniper trades, and why you've been getting stopped out over and over again. If you're serious about mastering scalping and price action, lock in, because this will change how you trade forever. Let's get to it. Understanding trading ranges and market structure. The key points: every session starts by forming a high and a low. This is what creates the day range, and this is what creates what you guys need to know when and how to enter into the market. Now, every time price breaks a high or a low, it either starts or ends a range. If you don't know how to identify this, you're basically trading blindly, and that's what we're not going to do. So the reason why this matters is because ranges tell us where the liquidity is sitting. Most traders get faked out because they think every breakout is real. I'm here to tell you guys, we're not worrying about anything when it comes to breakouts, because we're going to know from the fake to the real. Now let's get deeper. How do you actually enter trades once you know the actual direction? And that is identifying the direction before entering a trade. If price is rejecting from the previous session high or low, we now have a directional bias. Notice on the left hand side, we have the previous, let's say, London session. It was actually creating highs and highs and highs, previous session high. Now let's say going into New York session, the market started rejecting that previous structural high, which is the previous session. We instantly start seeing rejections off the candle, which is also known as stop hunts, which we talked about in our previous video. We created a low within like the first hour before that current session, which then determined we broke the previous low. This now identifies that the direction of this could be heading down, so we should be looking for sales in this session. And then now we're also gathering up the data to know where our P&L or our range would be at. Before you enter any trades, ask yourself these important questions. Where is price action relative to the session ranges? Second, is this reacting at key highs or key lows? Is there liquidity being grabbed before the move? If we go back to this chart and we imagine this was already a liquidity pool and we were grabbing liquidities, that's even more confirmation for you that now we got stopped out. Since we got stopped out, we wait on a pullback. When we get that pullback, we then wait on that last confirmation candle, engulfing candle, and then we sell it. And then you use the previous range, which will be from this top part to this low part, to figure out where your P&L and P&H levels would be, which you can use to mark as a take profit level or for pending orders as well. Now, one cool thing that we do in our TWS Trade with Solo community is that we physically go live, and we also show you guys collectively as a community that you can scale a $100 account to XYZ, and we do this all in our TWS community. So if you guys are ever interested in getting more exclusivity on scaling a small account or learning how to scalp on prop firms, tap into TWS waitlist. This will be available in April. You guys will be tuned in with everything we have to offer in there. And now that leads me into my next, which is understanding the importance of midpoint, which is the 60% level. Now, this is anywhere from the 50 to the 60. Midpoints acts as powerful reaction zones. If price respects them, we likely continue in that direction. This is the hitting level that most traders overlook. If price rejects from the midpoint, it tells us the range is still intact. What this looks like in the market is once we establish that the market broke that previous low, we now identify this could be our range. And I am going to show you guys live examples of how to find a range. But once that range is established, we wait on it to at least come about to the 60% mark of that range. Without knowing the range, this part right here wouldn't even matter. So once we identify that, now we are entitled to a sell trend. And this is where we start looking for that P&L level based off the range. And then we start to easily take the entry and then scale it down and then take our take profit here at this P&L level. So why this matters one, stops you from getting faked out by simple weak breakouts that we all see all the time. Also confirms whether the price is likely to continue or reverse. This is just like an extra confirmation for all of my safe traders out there. You will use this as an additional confirmation to give you more of a clarity that this actually is going to go in my direction. Let's talk about an even stronger level, the extreme highs and lows of the actual range. So here you have the opening of New York session, which is this dashed line right here. You clearly see that the previous session was London session. We took out the highs and we continue to break and make new highs. So this identifies that the market could be buying into the next session. So now we identify what had happened off the previous session and we could get an idea what's going to happen off of this session. Let's now start to understand how to find a range. So notice that this became the highest point of the range after it broke the previous low. So right here, this is the highest point of the range because it broke past this previous low, which is this engulfing candle here. The only way you can actually understand when the range has been formed is when it breaks previous structure. That is the only way you will know when that A point or that B point had been created. So if you look down here, this was the most recent high. We basically established that once again through structure. The moment that it broke past with this move right here, this now identified as the beginning of the range. The cool thing about waiting on a range first is this will help you get more smarter, better, precise entries because you're actually going off of realistic data instead of just assumptions, theories, more so than you knowing what is actually happening. So now that we understand that range was created based off of previous structure from breaking, we now identify this session is going up from one reason. The previous structure broke. Second reason, we broke and still continued to go up. And then the last thing is we now identify our range. So now we're waiting on that perfect setup to enter to look for another buy. Looking here, every session starts by forming a high and a low. This creates the daily range. Every time price breaks a high or a low, it either starts or ends a range. If you don't know how to identify this, you're basically playing blind. This is what I just said earlier, but once again, this is the key element to finding these sniper perfect entries. Let's talk about how to actually enter in this trade as a pro in the London New York session. So remember, market was already going up. We seen that and established what we like to call our range, which is this where it says first low, and then right here is the top part. Now all we have to do is draw out our fibs from here to this A to this B point, and then we are using those two Fibonacci levels to identify our PNL and our PNH zone areas, which institutionals do use to grab out liquidity and create new highs and create new lows. Remember, institutionals purposely do this because they know every retail trader has to react off of structure. Why will we wait on structure to form when we can actually get an idea of where the structure will form by using the Fibonacci sequence? Now going into another market, looking here, we identify market shift. It broke past the previous lows, which was in the previous section. We came into a new session, London, New York. Instantly, we dropped. And then from here, we created a pullback. Right now, pay attention to this low right here. Notice that we broke out with this displacement, which identified this high, most recent high, is our A point of the range, which basically means this is where we're going to draw out our Fibonacci. In order for us to know where to draw out the fibs from the B point, we need to wait on price to break that range. Right here, we had a high. We never broke past it. Right here, we had a high. We broke past it. As you see, market created a beautiful displacement, instantly dropped. And then this is a perfect entry off of my play that I always like to say. And then right here, I took this move because I drew my fibs from here to here. This is literally where the P and L level zone was at. And as you guys see, retail traders, they wait on it first. But since you guys are tuned into these videos and tuned into the TWS community, you will understand that you're trading with the actual banks because you're riding along a wave without them realizing you are. If you look here again, we have the exact same setup. Market created a range. This right here, we had our lowest point. this was the most recent high, this was the most recent low. Now, this all depends too, by the way, of how you're looking at this, because this also can count as a most recent low, and it never broke it. So you could still draw your fibs from here, going all the way up until it break that next low, which was pretty much here. But regardless, market created our range, which is from A to B. If we draw out our fibs sequence, the P&H level would align here, which is also, once again, P&H potential new high. And that's why I love this strategy to the T. Now, if you want to stop trading the wrong way and actually start catching sniper entries, do me a huge favor. Make sure you like this video, subscribe, and comment down below that you do want more, and turn on your bell notification so you be in tune with these videos. And if you want to trade live with me for more exclusivity, make sure you join TWS Discord. The link is in the description. Once again, if you're watching this now, the wait list is there, but it will be live in April for you guys to get tuned in with us. And this is why I say, if you don't have a real trading plan, the market will take your money. That being said, I'll see you guys in the next video. Let's get this money. Peace.